Today I want to talk about the 2-bar reversal pattern. And the reason I like it is, number one, it's pretty simple. And number two, it's price action. And it's a pretty decent way to spot potential reversal points. And I think it's a good addition to any trading strategy, really. And a lot of people are going to confuse it with the engulfing candlesticks, but they aren't really considered to be, vastly different. They pretty much have the same effect on a trader from a psychological standpoint. And that's going to make them both pretty useful. So what is it? It's just two large bars or candlesticks, whatever, each showing a different direction on your chart. So we want the first bar to plot strongly in the direction of the current trend. Now, trending style candlesticks like here, the large momentum, plots a strong bullish bar. So buyers are feeling pretty good about entering or holding onto their trades. But then their hopes for profits quickly dashed when that bearish bar around the same size of the previous bar plots right after. So this has some of the buyers selling out of their positions, and those looking to get short will actually jump on in the move. But I don't want you to get too wrapped up in specific details about the size of the candlesticks or the second candlestick wiping out the previous bar. Keep it simple. Do you see strong momentum in one direction? Yes or no? Was the next print a strong momentum drive in the opposite direction? Yes or no? What was your initial reaction when you saw the 2 bars print? Because oftentimes your gut is a really great indicator of what the market is doing. So don't always immediately just discount what you're feeling, because if you feel it, so do others. But the difference is that you'll know what to do with that information that you have. So that's going to bring us to what makes up the best reversals. So as I mentioned, when you're looking for a price action pattern, gut feel is a pretty good barometer of the potential power of the pattern. Because psychological issues, they're huge in trading. So if traders feel that their positions are threatened, they're going to end their trades. On the flip side, when traders feel that a market is showing signs of movement, they don't want to miss the move, and they just jump into trades. So there are some things that you can look for. You want to see the pattern stand out on the chart. Okay, you don't want to have to squint to see that. There's obvious intent in both directions. And this is especially important for the first bar of this pattern. Now, the second bar has to take out a significant portion of the previous one. And for significant, again, keep it simple. Anything more than 50% is good enough. And one other attribute that really deserves its own mention is where the best ones show up. So I like to see them in trending markets as price comes into potential areas of support and resistance. So now if we go back to wanting to have that pattern stand out, swing points in the market, as opposed to just being stuck in the middle of a range, a lot of people can see them. So this market was actually in a rally mode for over a year, and then it met up against resistance, which then led to a massive sell-off. That resistance was from 11 years prior. Price has a breakout of resistance at number 1, and it looks like price is just going to continue. So given that little to no upper shadows are on the bullish bar, a lot of traders are pretty confident, look for further upside. But at number 2, they get thumped down to the downside, and that's our 2-bar reversal. And a day after that, there was absolutely no doubt that that up ride was over. So that's a pretty massive trend bar. But this reversal, it actually fits our preferred attributes. We got strong price action into the highs. We have obvious intent to the upside as price breaks that resistance. And the second candlestick takes out at least 50% of the prior candle. Now this reversal can appear in any market, any time frame, and any place on the chart. The appearance of this pattern is not always a trade, okay? So you need conditions, just as I just outlined. So how do you trade it? Well, I did mention you can use it in conjunction with your current trading strategy. One great use is for traders who just use technical indicators for their strategy. When you add in a price action component like this, it can actually help raise your win rate, or at the very least, help you manage your trades. Now we want to find this pattern at potential support and resistance levels. So that's what we want to look for during a scan of the market. So here, price drove up strongly to resistance, And that move looks good, right? Traders are going to be thinking that a continuation is going to occur. That's one reason why waiting for a breakout and then the pullback or a pause is generally a better play than entering on the breakout itself. So then we get our bearish bar reversal with a candlestick that took out at least half of that previous bull candle. So how do you enter it? Sell stop order below the low of the reversal candle. That actually would help confirm momentum, at least in the short term. Stop loss, simple approach. Okay, it's going to make sense to what this pattern is designed to show, which is a reversal. If you place your stop loss just over highs for a short, that's reasonable. Because if this pattern fails, well, the continuation continues, right? We don't want to hold on waiting for price to come back. You do that, and that's an account killer. What about the reversal at support here? Well, we never know if a reversal is a pure trend change or just a pullback in price. So this was an uptrending market. We could also use the 2-bar reversal with a bullish bar as a trade entry after a pullback like we do here. Now this is more of an engulfing candle, but even with that, it's still a 2-bar reversal pattern. Let's wrap it up. It's a common pattern, okay? We're going to see it everywhere. But we probably only want to consider trading it at previous turning points, support and resistance levels. The psychology behind it's pretty obvious. We have strong momentum in one direction that tempts traders to get in. A quick slam back has them running for the exits as their expectations are not met. If we're in an uptrend, you see this, it's a bearish pattern, and in a downtrend, it's bullish. And you may want to consider a pullback as a reversal and use the 2-bar as an entry trigger. It has a built-in stop loss location right at the extreme of the candlestick. You may want to consider a trade management technique that's going to allow you to profit from a true trend change when they do happen. It's not common, but it can happen. Any questions or comments, pop them below. Hit subscribe, hit that little bell to be notified of new videos, and we'll talk soon.